Hello everyone, welcome to Kew Academy. This is CA Venuta Hegde. Here we are for CA Foundation Accounts class. So let's start with the topic Bills of Exchange. Okay. Whenever you are here for accounts, I always tell be good in your concepts. So in accounts, there are only 4 terminologies which you should know. Ma'am, what are they? I tell first one as asset. Ma'am, we know this word. Second one, I call it as an liability. Third one, I call it as an income. Fourth one, I call it as an expense. These are the 4 terminologies. I know you heard about all these terminologies earlier. But I'll go with the basic because it's required in my further concept. So first one, asset. You tell me, asset will be having which balance? Madam, we know assets will be having a debit balance. To increase the asset, what you have to do? See, increase you have to do the same as original balance. Same as original balance means what I should do? I should debit it. Now to decrease, what I should do? I have to do reverse. Reverse means debit means I should do what? Credit. Next one, you know this. Liability will be having which balance? Madam, we know liability will be having a credit balance. To increase the liability, you have to credit it. To decrease the liability, you have to debit it. Ma'am, how it is? See, it is normally having a credit balance. To increase, you have to do the same thing as original, that is credit. To decrease, you have to do reverse. Am I correct? Next one, income. Income will be having which balance? Credit balance. Madam, how? You already learned, right? Nominal account. What are the nominal account ka golden rule? Debit all expenses, credit all income. So credit all income means income will be having which balance? Credit balance. To increase the income, what you are going to do? Madam, we know to increase we have to do the same as original balance. That's what we have to credit it. To decrease, we have to debit it. Reverse. Same way you tell me for expenses. Expenses will be having which balance? Nominal account ka golden rule. Tell me. Expenses will be having a debit balance. We know, madam. You tell me now. To increase, what you are going to do? Expenses to increase. Yes, madam. We know to increase the expenses, we have to do the same thing as original debit. To decrease, credit. Everyone, this much we know in accounts, right? If you understand this clearly in accounts, in your foundation and your CA Inter as well, you will be able to understand all the journal entries without any difficulties. So you should be good in your basic, so develop your basic. In accounts, everything will rotate around these words. So if you are good in concepts, you will understand better. Let's proceed further. Now everyone, you tell me, I'll sell the goods. I'll do sale of goods. I'll sell the goods. If I sell the goods, tell me what is the journal entry I'm going to pass? Madam, we know sale of goods ka journal entry we know. Everyone, you tell me sale of goods, what is the journal entry you are going to pass? Answer? Okay, madam. We'll pass the entry cash account debit to sale account. Okay, you are telling you will pass cash to sales. Am I correct? But I'm not selling for cash. I'm not receiving the money. Then what entry you will pass? So can I tell if you're not receiving a cash, it is receivable. So here cash means you received. So can I tell if you are not receiving, it is receivable. Receivable is good for me or bad for me? It's good for me. It's good for me means receivable is an asset. Asset will be having which balance generally? Debit balance. Tell me yes or no. Tell me, what is the journal entry? That receivable, I call him as an debtor. Tell me, who is a debtor? Debtor is a person from whom money is receivable. So, receivable is an asset. Asset, I will debit it. Now, tell me, debtor account debit to sale. Sale is an income for us. Income will be having a credit balance. That's why to sale. Debtor account debit to sales account. Everyone knows this journal entry, right? Correct? So now tell me again, cash means I already received it. Debtor means I have not received the money. It is receivable. The same receivable, I call it as a debtor. Am I correct? So debtor is an receivable. So now if debtor is a receivable, see for example, I am here, your debtor is here. Now I have to collect the money from this debtor, this person. I am calling and asking him, hey boss, debtor, you have to pay money, debtor. When you will pay? He is telling, give me time, 4 months, 5 months and all he is telling. But I need cash, boss. I want to convert this. I want to materialize this transaction. Ma'am, materialize means how, ma'am? I want to encash this transaction. Debtor to sale means no, it's receivable. I have not received. I cannot do anything. So what I have done is, I went to this person called this debtor. I went to his home and I told, hey, you have to pay me, huh? So what happened is, I took a signed piece of paper and he is writing here, this person is writing here, what he is writing? I hereby confirm that to pay this much of money after 2 months. Example, he is telling and he is signing this and giving me. He is signing. That means, can I tell I wanted some kind of security for my money? See, it is receivable. I cannot do anything with that. When I asked him, he told, see, he signed a piece of paper and gave me, hey madam, take this piece of paper. Take madam, this is a piece of paper. Take this piece of paper, he signed, he accepted and he gave me. This will be a valid document. This is what I call it as a negotiable instrument. So this is a valid document under the law. This is what I call it as an bills of exchange. What I call it as an? I call this as bills of exchange. Think from my perspective. What's my perspective? My perspective is the person who is receiving the bill. See, he has given this bill to me. Now bill is with me. So can I tell, for with me bills are there. So can I tell this is bills receivable for me? Isn't it bills receivable? I have the bills receivable with me. I call this as an bills receivable. Bills receivable is an asset. You tell me asset will be having which balance? Yes, madam, we know asset will be having a debit balance. So, bills receivable account debit. Now, there won't be any debtor. Now, tell me debtor is having a which balance? Debit balance. To increase, I should debit it. To decrease, I should credit it. To debtor. See the journal entry now. Bills receivable account debit to debtor. Debtor debit, debtor credit is getting cancelled. See the ultimate impact. What is the ultimate impact? Bills receivable account debit to sales account. Oh. See, I was supposed to receive the money from my debtor. So debtor gave me this piece of paper. I am holding this piece of paper. I can do many things with this piece of paper. This instrument, whatever I am having, I call it as an bills receivable. So now it's a new asset. To create the asset, I should debit it. That's why bills receivable account debit. This one more old debtor, there won't be any debtor. Debtor is having a debit balance. To close, I have to credit it. So debtor debit, debtor credit is getting cancelled. Now what I have with me is bills receivable. Let's try to understand what I can do with this bills receivable. See, I have the bills receivable. What and all I can do with the bills receivable? Let's start now. Tell me, till now, whatever now we have learned, conclusion. Ma'am, we know the conclusion now. We pass the entry debtor to sale. Am I correct? We pass the entry what? Debtor to sale. So, debtor to sale. Will this debtor will be with me? Tell me. No, madam, we understood. This debtor will be no more. Instead of this debtor, we'll be having something called what, madam? Tell me, will we have something called bills receivable. So, what is the journal entry? Bills receivable account debit to debtor account. Am I correct? See, debtor account credit, debtor account debit is getting cancelled. Tell me what we have with us now? We have the bills receivable. Ma'am, what we can do with the bills receivable? So, in the letter, what he has written and what he has signed and gave me? He signed and gave me, I'll pay you certain sum of money after 2 months or 3 months or whatever. So what I can do with this bills of exchange is I can hold this bills of exchange with me. I'll keep in my pocket, I'll roam around, I can do that. So this is what I call it as an scenario number 1, I call it as an holding till maturity. What I call it as an holding till maturity. I can hold till maturity and at the end of 2 months, my debtor will call. Hey madam, do you remember 2-3 months back, I signed one piece of paper and gave. That piece of paper is fine madam now. Now I pay that piece of paper, I pay that bills of exchange. Now at the end of the maturity, I'll receive the money. First scenario. If I receive the money, I call it as an bill is honored. What I call it as? Bill is honored. Bill is honored means now tell me, I'll receive the cash. Cash account debit. I'll receive the cash, money is coming in. What is the golden rule? Debit what comes in, credit what goes out. That's a golden rule of accounts we have learned, right? Coming in. Now tell me, this bills receivable is having a debit balance. Now I have to close this, what I should do? Now tell me what I should do. It's having a debit balance. To close that, I have to credit it. Now see, bills receivable debit, bills receivable credit. Isn't it getting cancelled? Yes. So now again I am telling, with this bill, what I can do? I can hold this bill till the end of maturity. At the end of the maturity, I will get cash for that bill. That's what I am going to tell. Cash to bills receivable. Now see the ultimate impact. These bills will get cancelled. Close. Bills are closed. Or ma'am, or what you can do, madam? Or I'll be having this bills of exchange. I'll be holding this bills of exchange. I have the bills. I'm passing the entries in the books of person who is receiving the bill. See here, that's why I pass the entry bills receivable to debtor, right? I'm passing in the books of, in whose books? In the books of person. What? In the books of person receiving the bill. I'm just passing the entry. First one is bills receivable to debtor, done. One thing I'll hold till at the end of the maturity date and bill will get honored, means bill will get paid, means I'll receive the payment cash to BR. Or second scenario, what might happen is I'll be holding the bill. I'll take this bill and I'll give this bill to my creditors. Ma'am, what you're talking, madam? Okay, let's take. Now tell me, if creditor payment means, creditor means how, where it will come? Purchases. Purchases debit to creditor. Tell me yes or no. Isn't it creditor will be there in case of purchases? Purchase account debit to creditor account. Tell me yes or no. Yes, madam, correct. Purchases to creditor entry will be. Now for this creditor, it's a liability. They're having a credit balance. It's a payable. Now what I'll do is, I'll go and tell my creditor, hey creditor, I'll settle your bill, but not in cash. I'll settle your dues, not in cash, but by giving bills. How bill? I have the bills. I'm taking the bills and giving it to my creditor. Meaning, see here everyone, see creditor will be having a creditor is having which balance now? Credit balance. Now creditor balance should decrease. Everyone tell me, to decrease the creditor balance, what I should do? Creditor account debit. If you are paying in a cash, what entry you will pass? Creditor account debit to bank account. Tell me yes or no. If you are giving in a cash, you will pass an entry creditor to cash. But I am not giving in cash. What I am giving? I am giving in a bills receivable. So I had this bills receivable. I am giving this bills receivable to my creditor. See, what is going out is my bills receivable. See, now again see, bills receivable debit, bills receivable credit, getting cancelled. Creditor had a payable. Now I am paying to a creditor. Creditor payment is done. Hey, isn't it? See, purchases to creditor. Normal payment means you should have passed the entry creditor account debit to bank account. But here, are you paying in bank? No, madam, we are not paying in bank. So we are paying in terms of bills. So bill is going out. It's an asset. Asset will decrease. It will be having a credit balance. Where bills. So this is what I am going to call it as an endorsement of bill. What I am going to call it as an endorsement of bill. I am taking my bill and I am endorsing my bill to my creditor. This is what I call it as an endorsement of bills of exchange. Okay, are you getting what I am trying to say? So now tell me, till now how many possibilities we learned? Possibility number 1. Hold the bill till maturity and you will get the money. That is cash to bill. Bills receivable will get cancelled. Second possibility, you will pass an entry for what? Purchases to creditor. Creditor dues are payable. You will endorse this bill to your creditor. Are you getting? Ma'am, what is the third possibility? This is possibility number 1. This is possibility number 2. What is the third possibility? Second possibility is what? Endorsement of the bill. Possibility number 3. I am in immediate need of fund. See, this is or, okay? Possibility number 1 or possibility number 2 or possibility number 3. Ma'am, what is the third possibility, madam? Now, I am having a bill, correct? It's like a security for me. So, what I'll do is, I'll take this bill and give it to bank. Hey bank, take that bill, take my bill. Now, I'm giving this bill to bank and I'll tell, hey, my debtor was there. He promised to pay me after 3 months. You take this bill. I need the money immediately. Give me the money. So, I'll give this bill and I'll collect the money from the bank. Now tell me, I'll give this bill to whom? Banker. What I'll get in return? I'll get money, cash. Now tell me, what is the journal entry for this? Tell me. Yes, madam, we know bank account debit to bills. Receivable bills are not with me, they are with the bank. Let's take a number, 100 rupees, a bills receivable ka number, 100 rupees I'll cancel. But bank is going to give the total 100 rupee? Answer is no. Bank will tell, oh, I'm giving you immediate finance. Madam, I'm giving you immediate finance. Bank won't give you entire 100 rupee. Example, bank is going to give only 99 rupee, balance 1 rupee. Bank is going to charge something called discounting charges. What bank is going to charge? Discounting charges. Isn't it they're giving me an immediate funding based on my bill? Yes or no? This is what I call it as an discounting of bills of exchange. Tell me everyone what I call this as? Discounting of what? Bills of exchange. See, this is possibility number 3. Now everyone tell me again, third possibility what I did. I had the bill. I took this bill and went to bank. I give this bill to bank. Bank gave me a money, but they did not give the entire money. They gave me only 99. Whatever 1 rupee they did not give, I call it as an discounting charges. So what is the journal entry? Bank account debit. Money is coming in. That's why debit. Discounting charges is an expense for me. Expense will be having a debit balance. Debit. 2 bills receivable. Now everyone again understand bills receivable debit, bills receivable credit is getting cancelled. So the 3 possibilities, everyone understand bills receivable to debtor. I pass the entry. In all 3 scenarios, bills receivable is credited. So now bill is getting closed. So that's what my whole purpose, just to make you to understand the basics of this bills receivable. Now see, I had the bill. I can hold the bill till maturity. Second possibility, I can give it to my creditors. See, they are adjusting against my payment. Isn't it? I'm making a best use of the bills. Isn't it? It's giving me a liquidity. Liquidity means if it is there in the debtor, I cannot do anything, right? But as the debtor give me this bills receivable, see, I told my creditor, to your payment, take these bills. And I went to bank and gave third possibility. I told bank, give me money. Bank has given me a money. So isn't it, I'm making my receivable in a more effective way. I'm utilizing my receivable in the most effective way by way of bills of exchange. So there are other cases like, what will happen if he does not pay the bill? It's possible, right? So this is what I call it as a dishonor of the bill. And there are many other concepts relating to bills of exchange like due date, retirement of the bill. That and all we will study in the next class. Now my entire purpose is to make you understand the first concept, that is basics of bills of exchange, and just a basic journal entry. Just what will happen with the bills of exchange. First possibility holding, second possibility endorsement, third possibility is discounting. Next concepts we will learn in our next class. Thank you.